Hello everybody, and thank you for joining us today for our Allianz Risk Barometer webinar here with a focus on the UK. We're going to get started now, but before we do, just to advise you, you will have heard the notification. This meeting is being recorded for replay purposes. We will be sharing this on our website afterwards, and also a copy of the slides, so you'll be able to access the materials there. If you would like to access closed captions, you can do that from the bottom left-hand side of the WebEx. There's a little button there that says CC for closed captions that will give you the subtitles so that you can follow along if those will help you today. If we go through the slides here, which you'll see on screen, you can see today's agenda. I'm joined today by Luke Baker, who's our interim head of the AGCS branch here and also our head of liability. Duan Nguyen-Hugh, I hope I've pronounced that correctly, who has two roles. She's our head of strategy and business development and also leads our specialty insurance lines here in the UK. And Sergeant Todorovic, who is our head of global political violence and hostile environment solutions. I'm Elsa Sayers, I'm our head of marketing here for Allianz Commercial in the UK, and I'll be your moderator today. We're going to go through just quickly an overview of the global results and the methodology of the Allianz Risk Barometer. Many of you will be very familiar with this piece of thought leadership already, but just touch on those. Then we'll do a bit more of a spotlight on the UK results before going into some focus topics and then allowing time for Q&A at the end. We're imagining that today's session will run for about 45 minutes and we're really grateful that you're here. But with that, I'll hand over to Luke to take us through the first section of the agenda.
Great, thanks Elsa, and good afternoon everyone. It's afternoon just about. Great to be here, and thanks to everyone for taking time out of diaries to attend this. I think from my side, the Risk Barometer survey is a really important piece of work for us, and I think for our clients and brokers as well. It's almost now its 14th year of delivery, and it gives us a chance to actually take a step back a little bit, look at some of the more strategic issues that are going on and make sure we're listening to what's happening in our clients' worlds to make sure that our operations products are fit for purpose and directed in areas that will actually make sense, for our client base and for our broker base as well. You can see here we've had just under 4,000 respondents to the survey across over 100 countries and 24 industry sectors. So I think actually you look at that sample size and it's clear to me it's very representative of a broad range of geographies, trade sectors, obviously, and perspectives, of course, as well. So I feel the output from it is actually pretty robust in identifying what those key issues are that our clients and others are identifying as well. Of course, it's not just clients. We talk to brokers, industry trade organisations, risk consultants, underwriters as well. So again, there's different perspectives from across that insurance sector as well, and the broader industry representation as well, as I've said. Just for context, I think the dates that we ran the survey are quite interesting this year in particular. So mid-October through mid-November. Of course, that was a few months after a new government in the UK, and the US election was announced towards the tail end of that time frame as well. So I think that that kind of environment will perhaps have shaped some of the responses that we saw as part of the survey responses, as I say. So if we go into some of the key risks that were identified as part of this survey in a more granular way, some changes there, some going up, some going down. Cyber remains the key risk identified by our client base. Data breaches in particular, the likes of the CrowdStrike hit as well. I think the malware, ransomware stuff remains a key focus for everybody, whether that's within insurance, within our sector, insurers, brokers, our client base. That cyber threat, I think, is an ongoing issue. Both, I mentioned ransomware, malware, and of course some of the state threats as well. I think have become more prevalent and more obvious to people over the last sort of 12, 24 months in particular. The BI and CAT items remain unchanged with regards to where they are in the overall ranking. Legislation, regulation, again unchanged. Climate change was one of the big movers. It was up this year. I wonder if that had been ran in the middle of January with the California wildfires, that may have increased again, of course. And then fire explosion static as well. Macroeconomic developments down a little bit. Maybe that's a sign that we feel inflation, interest rates are a bit more stable than they were 12 months ago. And interestingly, I'm not sure it's announced yet, but Bank of England rumoured to reduce the interest rates further today from 4.75 to 4.5, which again might give that indication that people are a bit more comfortable perhaps with those sorts of movements. One of my sort of key observations here actually isn't necessarily the individual things, which are all key, obviously, but actually how interrelated they all are. So if you look at, for example, business interruption, cat losses and climate change, actually it's kind of, I'd say, two sides of the same coin, but three sides of the same triangle might be a different way to articulate it. The same with cyber, with BI and with new tech, obviously. Legislation, market developments, the macroeconomic environment as well are all heavily interlinked. And I think it's been well said before, right? I think the world of risk is increasingly interrelated. I think actually it's pretty obvious for me from these items that that's definitely true. And it's important, I think, for organisations to think around risk management, risk control in a context that recognises the complexity and interconnectivity of these sorts of items. So a few of the key things here, I think I've probably already spoken about these around the cyber. The geopolitical turmoil is ongoing. We know we've got wars that are ongoing across Ukraine, Middle East, etc. Obviously, the US presidency, I think, well, I can't say too much there, but I think that turmoil is likely to continue, to be honest. The natural catastrophe stuff there, I've referenced the California wildfire stuff that is under control now, but was pretty material from an insurance industry perspective, and of course for the people involved in that on the ground. And again, it links to the climate change item that we're seeing there. Interestingly, I think the shortage of skilled worker has dropped out of the top 10 to 11 there, which I think is interesting. Certainly I still feel that that's a pretty key area for us to focus on. So again, whilst it's dropped out of the top 10, I think we should all still be having that focus on attracting and retaining and training the talents that we need to ensure our businesses are successful. We have now a more micro granular view by different segments. So some of the large corp, mid corp, and different segments with a UK focus. I'll hand over now to Dwan to take us through some of those areas.
Thank you, Luke, and thank you very much. So I'm just going to briefly run through, I guess, some more granular detail so we can actually see the size of the company, the risks that are of concern. It's more specific to that size. So if I start with the large size companies, so for us, we've defined this as companies with an annual revenue of over $500 million US dollars. So I think naturally these companies are ones that will probably have a global footprint, global network, offices spread around the world, and therefore actually the risks that have been identified are very similar to the global risks that Luke has mentioned. So actually the top 6 is identical to those global risks in order, and actually it's only from 7, 8, 9, 10 where the order has changed. So I think, and as already mentioned, I think market developments, macroeconomic developments, they're very similar types of risks. So I think that it's probably a very close run thing, but essentially it is those external changes which are we see dropping down. Now, across all 3 segments, cyber incident remained number 1. So I think that just shows how critical this is. We hear a lot about CrowdStrike, it gets a lot of media attention, these large cyber crimes, thinking of cyber as potentially warfare in future, but actually I think we also see a lot of the cyber incidents impacting those smaller companies that maybe don't have the risk management, but it's still very much a threat. So we're seeing that more almost cottage industry type cyber incidents. So if we move on to the mid-sized companies, so these are the companies that are between 100 million, 500 million US dollar annual turnover. You'll see that actually, again, cyber is number 1. We see business interruption and natural catastrophe swing between 2 and 3. But again, I think what is important is that's still very much top of mind for these mid-sized companies. Where I do think you will see the most significant change for mid-sized companies and also actually for small-sized companies is the changes in legislation and regulation. Now, I think if we hark back to 2024, it was a very big election year. So I think we saw elections in over 60 countries around the globe. And actually, I think significantly, the bigger impact is not just the number of elections, but how many of those elections saw the incumbent lose market share or power. So I think when you see that shift, what you will see is changes in regulation, and actually not just small incremental changes, but quite big shifts in government policy. So I think because of that, that is why we would see these changes in regulation and legislation being such a large concern for clients of mid-sized and smaller sized companies. So if we move on to the smaller sized companies, now traditionally, and I think historically, whenever we've run this survey, smaller sized companies have always been more concerned with the immediate, let's call it the more localized risks. So compliance, macroeconomic development, skill shortages. What we are now seeing after this survey is actually some of the bigger topics, such as climate change, political risk and violence, actually climbing in the rankings. Now, I think partly that is linked to the election topic that we mentioned, but I think also probably in terms of the media and what we saw last year, we saw a lot of rioting activity in the UK. So I think that is definitely top of mind, and that is not limited to the UK. So I think that's why we're seeing those bigger shifts of the concern of smaller companies, or the cascade, let's say, of the concerns of the bigger companies now moving down to the smaller companies. So I think if I move on now to actually doing a deeper dive on the UK and just a bit of an overview of how the UK risks compared to the global risks. So I think when one of the big changes is the changes in legislation and regulation. As mentioned, we had a big election last year. We changed governments, big shift in policy, and that I think is why changes in legislation and regulation climbed up for the UK business as a concern. Political risk and violence, again, we saw a lot of those types of risks on the streets, and again, that is why it went up. New technologies, I think linked with the new government, we also now have a government who's very much invested in AI. I think Labour have announced the 25 billion investment in AI to look at NHS services, to look at other ways of improving processes to support the growth in the economy. And I think with that new technology also comes the new risks associated with that. So I think that's maybe some of the rationale why these things have climbed up in the UK risk barometer. So moving on, just some quick highlights, I think very similar to the ones that were mentioned on the global risk barometer. So cyber, top risk, again, 11% higher than second place, highest ever score. And with the current environment, it's hard to see that concern will be lessened this year. I think geopolitical turmoil, impact of government changes, I think we saw that through that risk increasing across all segments. I think natural catastrophe and climate change did drop in the UK, but I think it also linked to timing, because I think what we saw at the end in Q4 2024 was actually a fairly benign cat year. However, I do think this year, in January, you see the wildfires already. We had Storm Dara, Storm Eowyn. So I think this year it will be much more top of mind. And the shortage of skilled workforce, fully echo Luke's comments. This is still an important risk for us. I think talent, the war on talent, as we say, I think that is set to continue. It may have dropped, but I do think it's one of those that is probably consistently always in one of the top risks for small companies, especially. So I think that's a run through. And if I head back to you, Luke.
Yeah, great. Thanks, Duan. So we have just a few slides here on a few snapshots, and again in more micro way. We might skip, Elsa, please, to the AI one rather than do cyber again. Thank you very much. So for me, this is a really interesting area, actually. As Allianz, as an industry, I think we're getting better and better at considering how we can use AI and new tech to make our business more efficient, more effective in a whole load of areas. So I think it's interesting to me that this is a risk barometer and a risk to a business area or to an economy or an industry or whatever. But I feel that actually the use of new tech and AI in particular is a positive thing. I think if it's used in the right way, it should be seen as a value creator, a way to de-risk some things, and certainly to make businesses more successful in their respective fields. I think it's interesting that a third of the respondents thought that the impact of AI was neither going to be positive or negative. I think I'm interested to know what industries would think that is true, because it feels to me that it could be a threat with competitors using it more effectively, or a threat or a positive if you're ahead of the curve. We had an Allianz conference last week, and our CEO was giving a talk on the use of AI from an underwriting perspective, and he made the analogy around jobs not being taken by AI, jobs being taken by other underwriters that are using AI. So I think certainly in my expertise in the underwriting side, the use of AI is around making underwriters more effective, claims professionals, etc., more able, more efficient to do a better job quicker. So I think from my perspective, I would certainly see AI as a benefit risk, albeit there are risks that are implicit with the utilisation of new technology. I think it's worth, this is focusing on AI obviously, but of course new technologies are not just focused on in the AI space, like we default straight away there. But of course, we can look at different things in the natural resources, power environment in particular. The use of modular nuclear is an interesting area for me, and of course that shift to greener power sources, I think, is an ongoing investment globally. I think that will give some interesting outcomes in that new technology space as well. And then legislation regulation, again, really interesting area. I think we've referenced a few times now the extent to which it's been a big 12 months in the government makeups globally, and that's feeding through into these areas as well. There's the obvious stuff around interest rates, national insurance increases last year, and that's clearly affecting everybody. Inflation, I think actually remains a risk. So I think we've seen interest rates coming off a little bit as inflation appears to be more in control. Of course, with threats of global tariffs, some being imposed already, likely to be retaliated against and be counter, like with the different countries impose them in different ways against the same countries. I think that has the potential to drive inflation again, which might then reverse some of the interest rates reductions we've seen in more recent months. But I think it's definitely an ongoing, fluid, dynamic area that we need to keep our eye on and just understand when those items change, what the impacts are for our business. Supply chain, another obvious area where the imposition of tariffs is likely to impact supply chain issues as well. And I think, so next up, we've got a focus now with Serge, our Global Head of Political Risks and Terrorism. Over to you.
Thank you. I didn't realise we had a sauna in Alice building. We seem to find the hottest room available. But yeah, thank you, Luke. Yeah, really interesting. And I think having reviewed the risk barometer a few times now in the last few weeks, especially, I've sort of noted really patterns across the responses that we've seen, not just across the segments of the clients, but also across the globe. And we'll talk a little bit more about the UK, but generally speaking, if we focus on kind of political violence and political risk as a response, it has moved globally down one, which would indicate that it's less of a risk than it was before. But actually, what I've noticed fundamentally in the answers across the other segment is that there is a pattern which covers political violence to some extent. So if you look at the cyber element, and do you mind going back to the cyber chart that Luke skipped for me? Thank you. You will see that the number 2 answer there is cyber attacks on critical infrastructure and physical assets. And that's one of the bigger topics that our political violence market really needs to get their hands around. And it's something that, of course, we're very conscious of. If you also look at the other top 10 topics globally, but also in the UK, you talk about cyber naturally. You talk about changes in legislation and regulation. If you don't mind just jumping down to another slide for me, the UK.
Oh, sorry, the UK top
yeah.
10.
Do you mind? Sorry. What you'll see there is that changes in legislation and regulation is number 3, and it's gone up from, I believe, is it number 7 historically? Yes. And of course, Luke mentioned the elections, but this isn't just the UK issue, it's actually a global issue. And yes, elections were big in 2024. I think what we saw is that there wasn't violence during the election process, but where we did see big shifts in violence and protests and strikes is when there have been direct changes to legislation, when the government has switched from left wing to right wing to left wing, and they've tried to impose new the mandate that they've been elected on, and that's something that again resonates with political risk and political violence very highly. And we saw that in the UK, and this is why I would say, not just as Luke mentioned with regards to taxation, national insurance, this is a topic that political violence underwriters are watching closely, and not to mention microeconomic developments as well. This is, of course, something that we've got to be conscious of. As we saw over the last 5 or 6 years, the cost of living crisis also led to problems around the world, in the Middle East. So when people are paying more of their weekly, monthly salary on food and the basic items, of course, they're going to have issues with government and may have gripes that they want to air a little bit more violently. If you don't mind popping to the normal slides now. No. Thank you. So in the UK, as with France and Italy, political violence and political risk has risen to in the top 5. It does surprise me a little bit in the UK, but I guess this is the timing of the survey because of the change in government and the problems that we saw following it with regards to the Southport murders. There was violence on the streets in England, and I think that has a lot of influence what we are seeing in the survey. But I wouldn't leave it just on that basis, because I think the news that we get day in, day out is constantly about the threat potentially on critical infrastructure, potentially of the expansion of the conflict in the Middle East, and also in Europe with regards to Ukraine. So this is in our eye line, and this is in our business eye line, and of course that's why this is ranked up high. And I'm not saying that is it's a false number 5 or number 4, I think it was, but I would say that it's often driven by what we're seeing in the press, and naturally political violence, because it's quite an emotive, I would say sometimes a niche issue, it does get more headlines than maybe others. You don't want to go forward. Mm-hmm. So you can see that it's been in the top 10 4 out the last 5 years, and I think in reality it may drop off depending on the 2025, but let's hope that happens, of course. With regards to the responses and which part of political violence we're talking about, I think there are a number of key factors. So civil unrest and riots are a top response from the clients and the respondents to the survey. We also have war, and I think that's risen over the last few years because of the Ukraine conflict, as well as the conflict in the Middle East, and the potential issues that escalation may have for our businesses. If I jump down to terrorism and sabotage, had we conducted this survey 5 or 6 years ago, maybe even more, I think terrorism and sabotage would have been the highest. That's dropped off, but actually it is rising. The risk of terrorism and sabotage in particular is something that we've got to really be conscious of and wary of. And maybe in the future we will be splitting terrorism and sabotage as 2 different responses from our consultants, because these 2 risks are fundamentally now becoming different to where we are now. So in terms of our segments, you can really see that globally we're number 9, excuse me, but in the UK, so our large segment rank political violence and political risk as number 6, and that has risen, and I think that has a lot to do with interconnectivity of the world and people seeing conflicts globally. Mid-sized companies and small-sized companies are also in the top 10, and that has a lot to do with political violence being brought to the doorstep of the companies that that are based in the UK fundamentally. So I think this is a reality of life, and again, I hope that it does drop out the top 10, but I don't see that happening in the short term. So historically, why is PV a top 10 topic? Well, the bar chart in front of you represents the losses in the political violence market, or losses around the political violence perils over the last 20 years. And you can really see in 2019 onwards, there's a big change in the quantity of the losses, including the terrorism and sabotage perils, SRCC, and war on land perils. So you can see in 2019, majority of the losses are strikes, riots, civil commotion, or civil unrest, and that is led by the civil unrest in Chile. In 2020, you've got the Black Lives Matter. In 2021, you have, goodness, what was in 2021? My mind's blank, but huge losses, of course, as well in that year. And in 2022, you've got the Ukraine war. 2021 was the South African riots, which were the biggest loss to hit the political violence market. 2022, you have the Ukraine war. In 2023, you've got a number of losses, but including here is the policy shift change in France from the French riots. So, and again, in 2024, you have riots in New Caledonia, Kenya, as well as a number of other countries around the world, which have continued this increased trajectory for political violence losses and issues.
It's very stark, isn't it, how over the last 5-6 years it's really changed materially.
Yeah, and it's become, as you can see, the performance of the historical book, and that's why there's such a lot of capacity there. It is just people are willing to hit the streets. Sometimes there is elements of copycat, and there's an element of emboldenment of whilst they're protesting, that they have the entitlement to loot and damage. But also, I think it's also linked a lot to other factors, like, which I'll mention in a second, populism and what are the politicians saying, how divided is the society and the political landscape. So all of this feeds into the people's gripes and issues. So I guess what is driving this? And if we go on to the next slide. It's okay. So if we do mind skipping over this one, sorry. We've talked a bit about coverages before. So what is driving terrorism, sabotage? Well, there's a number of factors on a very high level. Often it's associated with Islamist terrorism, but actually in reality, the biggest growth of terrorist activities on the far right. There is religious extremism, and what we've seen in 2024 is there's been a shift. There's a vacuum filled from the old ISIS to the new ISIS, and this is something that we've seen in Moscow with the theatre attacks, where there was, I think, over 150 casualties and the whole theatre was burnt down. Further to that, moving away from the kind of single group or religious extremism, we're talking about state actors and proxies. So we see states sponsoring terrorist groups or separatist movements across the world. And we saw that a lot in the Middle East, of course, with Hamas and Hezbollah, and in other countries as well. The other growing topic from terrorism and sabotage is environmental or climate activism. And although it's often seen as more of an act of nuisance and maybe just more of a strikes, riots, civil commotion type issue, we've seen the topic move more into extreme acts, like we saw last year again with attack on the electricity infrastructure in Germany. That was an act, I believe, an act of terrorism from a climate group. And this is again a topic that's rising. And especially as you see, even today, you see announcements from companies and governments of pulling back of their climate promises and kind of targets. That is, of course, something that's going to influence these, because if you are not getting the message across, if you don't see governments and companies doing their part, these people will of course, activists will become more extreme. And finally, in certain parts of the world, organised crime is a big issue. It's sometimes seen as crime, but it's also sometimes seen as terrorism or narco-terrorism. So again, in particular parts of the world, this is a big topic. Go to the next slide, please. What is driving strikes, riots, civil commotion or civil unrest? Well, we had an election cycle last year and there were a number of changes of governments. There were also protests around elections. But fundamentally, the year passed off relatively peacefully. Where we have seen, as I mentioned earlier, is where there has been a big shift in policy, or as policies were introduced, we have seen protests, riots, sometimes peaceful, strikes as well, but we have seen some violence, including in Kenya, where there was a government tried to change the tax regulation and laws, and obviously that they reneged on that because of the violence that was witnessed in the streets. There's election discussions in Mozambique. The results have been disputed, and there's a lot of violence, which we're not seeing a lot of in our press because it's less interest to us, of course. But this is happening in many, many countries around the world. Economic hardship. This is why we talked a bit about that macroeconomic point. There is, a fundamental driver for people to hit the streets, and if they don't have money in their pockets and they cannot live like they lived, or there's been a drop in their living standards, they will of course protest, and this is driving sometimes acts of violence as well. Misinformation and social media, we all live it in day out now, and I think in the UK in particular, it was pretty much the spark that triggered the protest that we had in the UK across cities, targeting hotels that were housing migrants. So that's one example of it. There are plenty of other ways that this is leading to increased strikes, riots, and civil commotion. I mentioned climate change, and I think I won't go repeating that, but populism is something that runs in the background of all this in parallel, and there's been a definite shift in political spectrum from solid liberal centre politics into the left and right, and actually we could all do with going back to the middle a little bit, because I think that's where a lot of peace and potentially prosperity is based. And then finally, what is driving war and warlike perils? Well, there's a shift, and that also happens around changes of government, but there's a shift in the global order. I think we're moving very much from a unipolar world quickly at pace to a bipolar or tripolar world. If you look at the way that China and Russia are behaving, sometimes in unison, sometimes independently, compared to what we consider as the liberal democracies of the world, we're seeing this as a big shift. And they're not doing this only militarily, they're doing this with their economic power, finances, and various other ways. Proxies, I mentioned a little bit about that. Doesn't just happen with the old traditional East and West bloc style when they, in the Vietnam War. We've seen this in the Middle East very clearly, where Sunni and Shia are backing two different sides in a particular conflict because it's in their own interest to do so. So having states sponsoring smaller conflicts can naturally escalate this. And then linked to populism and those types of, that type of politics is ethnic, cultural and religious divisions. They're more pronounced. They can be amplified by misinformation and media. And naturally, groups that are at risk are arming themselves one way or another. So these are the factors that are driving the war and warlike perils as well, globally.
Thanks, Serge.
Comes to an end. Thank you.
Indeed. So I will just flag now that we'll be moving to Q&A shortly. So if you do have questions, please add them into the Q&A panel, or if you pop them on the chat, we'll pick them up from there as well. Got a few coming in, but get your questions in. And before we do move into that, I did just want to sort of flag, obviously, there is a raft of information that makes up the Allianz Risk Barometer itself. So if you haven't already, go onto our website, check out the report. There's all sorts of articles, video content and interactive content there for the Risk Barometer. There's also the appendix document, which is actually my personal favourite. I shouldn't admit that, but that's where all the raw data can be found. And actually, we've touched on the findings by global, UK and segment, but actually we do break it down by industry types as well. There's 24 different industry types. So if you're sat in a particular segment or industry, do go and check those out, see if that resonates with yourself. So there's a whole wealth of information sat in the appendix. All of that can be found on our website, on the report hub. So if you just go on to commercial.allianz.com, you'll be able to find the Risk Barometer. And similarly, it feeds into our whole sort of trend for publications and all the thought leadership we deliver throughout the year, that we try to share our insights with you from all of our experts across Allianz Commercial and indeed the wider Allianz world. And you can see a sort of a snapshot of some of the recent offerings that we have on there. These are some of our annual ones or things that we do just as snapshots as well. And you can find those there on the News and Insights page. You can also sign up to our newsletter there. So if you never want to miss out, you can make sure that you're accessing those when they're hot off the press. We've got a great sort of calendar of publications coming down the track for 2025. So there's some exciting things to come. But with that, we will move to Q&A, and we have had a few that have come through, but I will flag the Q&A box should be on your panel along the lower ribbon if you want to send your questions in. The first question, and there has been one about sharing the slides. We will be sharing the slides afterwards along with the replay on the website, so keep an eye out for those there. And the first one sort of speaks to, we touched on it with global results and the UK results, but about the interdependencies of risk. So with increasing interdependencies of these risks, what can be done about prevention and also mitigation? Who would like to sort of touch on that? And then Serge, I'll maybe come to you with a PVT lens afterwards.
Yeah.
I'm happy to kick off. I think the start of the answer in the question, right? So I think firstly recognising that risks are increasingly interdependent is really important. So we talk around enterprise risk management, and I think that's a really, really key start point. So recognising what the risk landscape looks like and how it interacts is a super crucial start point for that. And then rolling that down to work out the impacts on respective businesses is the obvious next step. I think as an insurer, I default straight away to insurable risks, but I think as part of that assessment, recognising what's insurable and what's not insurable is part of it. And then I think clearly for different industry sectors, the mitigations and the actions will vary depending on what the key risks are by sector. But I think, like I said, starting at that high level ERM basis with the recognised interdependencies, I think is an important start point.
And I think from my view, definitely, as you say, recognising the different sectors. I think also recognising the different segments or the maturities of the clients that you're working with, because I think what we find is obviously the smaller companies probably have less investment in their risk management. They probably have less investment in interrogating their supply chain. I think there's a huge opportunity really for brokers, work with clients, work with insurers to really understand that full piece, the interdependencies, understand where your supply chain, understand how you can mitigate the risk through not just insurance, but maybe there's ART products we can offer. So I think there's a lot there, but it's very much coming back to how well do you understand not just the risk of your immediate client, but what are those risks that are concentric to that client as well.
Yeah. And I think recognising it's a dynamic situation. So what's true in day one, 6 months later will almost certainly have changed. So I think that continual analysis of what's going on is an important way to make sure that the risk mitigations are still fit for purpose.
Yeah, so I think I would approach it. I agree with all of this. I would look at it as a couple of things. I would say what is in your control and what is not, and fundamentally, then you could deal with some things that you can't. So I think that's one way of first identifying it, and that may be, again, as Duan said, do you have the budget to assess that? And there's a question around that depending on the size of the company, and then equally running parallel to that is what is achievable in the short term and what can you change to mitigate that risk and what can you do it in the long term. So again, this requires a little bit of thought and planning. From a political violence perspective, I think you can, aside from doing that, you can think about the physical assets and kind of mitigate those risks in particular countries, so the pinch points, and you can do that through physical security, through keeping a low profile, through onshoring, nearshoring or friendshoring. That's kind of the physical element of it. But also as a company, you could, what are you posturing to the outside world? I think that's really important from a political violence perspective. Is, are you a company that just gets on with the job? ESG strong, and those points reputationally, you're trying to build that, and I think that will influence kind of the risks that you may have from a political risk and political violence perspective. So lots to think about here, and as everyone said, you could do that in-house, but there are super agencies externally that can help, that we work with sometimes, or insurers and brokers. So a lot of us offer that kind of product, and naturally it's something that's worth exploring.
Yeah, thank you. The next question we have is, sounds like the traditional risks are stable. Are these becoming outdated and could be managed by AI, leveraging expertise and underwriting to focus on the newer emerging risks? Do we have views on that? I mean, you touched on how we're sort of integrating AI to free up underwriters' times and how we're using it, but are we moving away from the traditional risks, or we know they're still there?
Yeah, I think for me, it's not moving away from traditional risks. It's more that other risks are catching up. So I think things like CAT, BI, fire explosion, slips and trips, EL disease. Actually, these things aren't going away. I think they've been mitigated. I think we're doing a better job at managing some of it. But to Serge's point, there are some things that are outside your control as well. So I think having a focus on traditional risks is still really important, whilst recognising that our resource brain bandwidth needs to be also shifting to recognise some of the new areas as well. I think there are things that we can use AI for and new tech to assess traditional risks in a more adequate, robust way. So I think things like CAT modelling, things like looking at supply chain interdependencies, the use of AI in those areas, I think will produce more robust answers. If I look at some of the things that we're doing in our shop now around the use of AI to map processes, I think there's definitely ways that we can use AI to actually enhance traditional areas, if you like.
Yeah, agree. I think the AI piece, I think it's also probably a question of maturity. So right now, I think the AI piece would be really good at those traditional, but it comes back to, it's a tool that you want your underwriters to use, not necessarily becoming the underwriter. So I think it should give the underwriter better data-led insights, but I would still think that for certain risks, you would still need that human judgment at the end to add that value. I think in terms of the non-traditional piece, I think AI is a really exciting thing to look at. I mean, especially if take your field. I mean, if we could probably use AI to map where we think there are probably going to be disturbances based on, what's the internet traffic, what are people looking at, what are the hits that are getting on the echo chamber, let's call it, and then you could probably use that to predict where are your high risk areas. So I think using data in future to be more predictive is definitely an area that I think will change the way we think about insurance.
Well, actually, some of the consultants in our area and kidnap and ransom field as well are using AI already to provide information to clients and underwriters alike. So they have those systems. We've had demos of them. They look great. I think it's a bit of time whilst it goes fully live with a lot of them. But I echo Luke's point. I don't think that the traditional is going. If you look at, from my perspective, if I'm looking at what are the concerns of the clients, particularly in the political violence, it is often the physical and the PD and BI, property damage and business interruption. It's the physical access, and that's maybe peculiar to the political violence and terrorism space. But yeah, we the risk is evolving. I think it will take. We talked about cyber for about 10 years in the political violence space, and really there's only been 4 or 5 incidents that's led to a physical damage loss. So it is difficult to cause a physical damage loss with a cyber. Is it getting easier? Are there more risks? Well, yes, because geopolitically, I would say state actors are now investing very, very much into this capability. It's unlikely to be ISIS that are causing this problem. It's going to be state-sponsored sabotage style incident or terrorism or war potentially as well. So it is evolving, our risk, and underwriting is also evolving. At the moment, the capacity is low on that kind of exposure, but ultimately it comes down to, I think, the traditional covers for me anyway.
I'll take one last question with an eye on time. We said we'd do 45 minutes. So have we become more reactive to threats than in previous years? Is this due to the media or the general speed of change? I think that's quite an interesting one as well, because in terms of if you consider AI and the fake news and also what we can do, we've seen in terms of deep fakes as well, is that driving evolving risks, especially in your area in terms of that polarisation that you talked of? Is that sort of a concern for people and for companies?
Well, yeah, I think yes. It's a very simple answer. I don't know what else I can. There were a couple of sections to that question. Could you repeat the last second part?
Are we becoming more reactive to threats than in previous years? Is this due to the media or the general speed of change?
I think there is a lot more media. There's a lot more ways people consume information. So ultimately, I think people are more informed, but they're also more uninformed at the same time. If that makes sense. If they're not truly, looking at the news and beyond the headlines. But for me, yeah, I would say we are more reactive, but because our clients are needing to be. And, if you think about fake news spreading something false about a particular client, it could have a massive reputational impact on it, even if it's not true, the cat out of the bag kind of scenario, but also it can have a physical repercussions for them, because you may have protests, you may have violence against your staff or your premises. So I think it's right to respond to this without shadow of a doubt.
Yeah, exactly. I think we are as an industry, as you know, as a country, as a world, more reactive, more quickly when things happen, which I think actually isn't necessarily a bad thing of itself. We have to be careful we react in the right way. So if we're reacting quickly, I think we have to make sure that we're doing it in the right way, and that's a particular risk, I think, given the news amplification that we see now. So when something breaks, it's all over social media. The traditional press, non-traditional press means that when stuff happens, there's an inbuilt, innate amplification, I think, for everything that happens, which drives that reaction, I think. So it's that recognition that news is amplified and that we have to react quickly. But let's make sure the reactions are appropriate.
But I would say one thing about Allianz strategy. It's fundamental that there's no knee-jerk reaction to these things, and that we do get the facts right. Say, in my space, political violence was big news the last few years, and naturally had a lot more questions internally. But actually, Allianz didn't. There was no knee-jerk reaction.
Exactly.
So we're still committed to the class, and you could have easily walked away. So these are the things that we as companies, from a strategy perspective, just have to put into perspective.
Great, thank you. We are at time there, so I'll just take the opportunity to say thank you to everybody who's joined us today. Thank you to our panellists, Serge, Luke and Duan. The replay will be available with the slides online shortly, and we look forward to sharing more webinars and thought leadership with you soon. But thanks for your time today.
Thank you.
Thank you.